Over 4 million British families are about to see their mortgage payments jump by £500 a month. House prices just recorded their biggest December drop in over a decade. And the Bank of England can't do anything about it because inflation is still too high. If you own property, want to buy, or you're paying a mortgage right now, the next 12 months could make or break your financial future. What I'm about to show you isn't being reported in the mainstream news, and it could save you thousands of pounds or help you avoid a massive mistake. Welcome to UK Economic Report, your go-to channel for the latest updates on the UK economy. From inflation and interest rates to housing trends and government policies, we break down the numbers so you can understand how they impact your finances. I'm talking about the UK housing market, and what we're witnessing right now isn't just a slowdown. It's the beginning of something that could reshape the entire property landscape. So grab your cup of tea, because what I'm about to share might just change how you think about British property forever. Let's start with the numbers that estate agents don't want you to see. According to the latest data, asking prices dropped by nearly 2% in December alone. That's the biggest December fall in over a decade. And here's the kicker, this isn't just a seasonal blip. Year-on-year prices are down, marking the first sustained decline since the market supposedly recovered from the pandemic chaos. That £2,000 drop might not sound like much when the average home costs over £270,000, but it's the direction that matters. But the real story isn't in the headline figures. It's in what's happening beneath the surface, and it's absolutely fascinating. The UK housing market has essentially split into two completely different worlds. Up north, in places like the Northeast, house prices are still climbing. We're talking growth rates of nearly 8%. Meanwhile, down in London and the Southeast, the market has hit a wall. Growth there is less than 1%, and in some posh areas, prices are actually falling. It's like watching two different countries operate under the same flag. Here's where it gets really interesting. Remember when mortgage rates were hovering around 1.5% just a few years ago? Yeah, those days are long gone. Right now, even with recent cuts, you're looking at rates around 4 to 5%. That might not sound dramatic, but let me put this in perspective. Someone with a typical mortgage is now paying 3 times what they were in late 2021, 3 times, for the exact same house. That is not just a challenge for affordability, it is a fundamental restructuring of who can actually buy property in this country. And it's not just about the monthly payments. The Bank of England estimates that 4.4 million households will need to refinance onto these higher rates by the end of 2027. 4.4 million families watching their housing costs potentially jump by hundreds of pounds every single month. Some will see increases exceeding £500. That's grocery money. That's childcare. That's people's lives being squeezed in real time. Now you might be thinking, but interest rates are coming down, right? Problem solved? Not quite. Here's what the mainstream media isn't emphasizing enough. While rates have dropped from their peak, they're still nowhere near what we got used to in the 2010s. And here's the really concerning part, inflation is sitting at over 4%, way above the Bank of England's 2% target. That means the central bank can't just slash rates freely without risking another inflation spiral. They're stuck between a rock and a hard place, and British homeowners are caught in the middle. Let's talk about the elephant in the room, stamp duty. From April this year, the tax-free threshold dropped from £250,000 back down to £125,000. For first-time buyers, it fell from £425,000 to £300,000. Translation? If you're buying a home, you're now paying thousands more in taxes than you would have just months ago. Estate agents saw a massive rush in March as people scrambled to beat the deadline. But now, the market's gone quiet. Really quiet. It's like everyone hit the pause button simultaneously. But wait, there's more. The government introduced something called the High Value Council Tax Surcharge, basically a mansion, tax hitting properties over £2 million starting in 2028. Now you might think, who cares about millionaires? But here's the thing. When the top of the market freezes, it creates a ripple effect. Wealthy sellers can't sell, so they don't buy the next tier down. Those sellers can't move, so they don't buy in the middle market. It's a chain reaction, and it affects everyone. Speaking of chains, let's discuss what's really killing the market: affordability, or rather, the complete lack of it. Analysis shows house prices have increased at twice the rate of household incomes since 1999 in England. The average home now costs the equivalent of 8.6 years of household income. 8.6 years. That's assuming you save every single penny and don't eat, pay rent, or breathe. The math simply doesn't work for an entire generation of would-be buyers. Consumer confidence has taken a nosedive too. The Deloitte Consumer Confidence Index dropped to negative 10.4% in mid-2025, the lowest since early 2024. Job security worries are at levels not seen since 2023. When people are worried about keeping their jobs, they don't make massive financial commitments like buying houses. It's basic psychology, but it has profound effects on market dynamics. Now here's where the story takes a twist. Despite all this doom and gloom, the market hasn't crashed. It's deflating slowly, like a balloon with a tiny leak. First-time buyers are actually entering the market in record numbers, up 20% in 2025. How is this possible? Well, many are targeting cheaper properties in more affordable regions, accepting smaller homes or longer commutes. The dream hasn't died, it's just been dramatically downsized. The supply crisis is another crucial piece of this puzzle. England delivered only 199,300 net additional homes between April 2024 and March 2025. That's nowhere near the demand. This shortage acts as a floor on prices, preventing the kind of dramatic crash some predicted. Even as affordability worsens, limited supply keeps prices from freefall. It's a painful stalemate where nobody wins. Buyers can't afford homes, but prices won't drop enough to help them. So what's actually happening? The UK housing market isn't collapsing in a spectacular 2008-style crash. Instead, it's experiencing what experts call correction, a slow, grinding adjustment to a new reality of higher borrowing costs, increased taxes, and stretched affordability. Prices are edging down in expensive areas while still rising modestly in cheaper regions. It's messy, uneven, and deeply frustrating for anyone trying to navigate it. Looking ahead to 2026, forecasters predict modest growth of around 1 to 3% nationally. But those averages mask wild regional variations. Northern Ireland, Scotland, and Northern England could see continued solid growth, while London and Southern England remain under pressure. The North-South divide isn't just widening, it's becoming a chasm. The really scary part? We might be in the eye of the storm. Thousands of fixed-rate mortgages are still set to expire in the coming years. Those households face payment shocks they haven't budgeted for. Economic uncertainty from global trade tensions and domestic political instability continues to weigh on confidence. And let's not forget climate change, which is starting to affect property insurance costs and desirability of certain locations. Here's the bottom line. The UK housing market is falling apart, but it's doing so in slow motion. It's not the dramatic crash that makes for exciting headlines. Instead, it's a steady erosion of affordability, opportunity, and hope for an entire generation. It's families choosing between moving up the property ladder and paying for childcare. It's us young professionals watching their parents' generation accumulate wealth through property, while they locked out entirely. The market everyone thought was invincible is showing its vulnerabilities. Higher interest rates exposed how dependent the system had become on cheap money. Tax changes revealed how sensitive buyers are to additional costs. And the ongoing supply crisis demonstrated that you can't solve a housing shortage without actually building homes, something Britain has failed to do for decades. Thanks for watching UK Economic Report. Don't forget to subscribe and hit the bell icon to stay updated on the latest UK economic news, expert analysis, and financial insights that matter to you.